So were most of you here the last time we did this introduction class on what the footprints are, how to establish or how to configure them and all that stuff? You know, I kind of what I explained. Does everybody have a rough basic idea on kind of what we went through the last time or what we explained and spoke about?
Yes,
Yes.
Frank.
Go ahead.
No, I said yes.
Oh,
I
yes,
do.
okay.
Okay.
Or does anybody have any lingering questions about anything that we went over last time that they want to ask now or are curious about? No? Okay. All right. So, okay, you can type it in the chat too if you guys are shy. This isn't so this is Frank from the Discord, right? It's not Paul. I'm just using Paul's Zoom link so we can have a little more time kind of going through this because sometimes it takes a while. But I appreciate everybody being here. So last
Frank,
time what we did
Frank,
Yes,
can
sir.
I ask Hank here, right? One off question I'll ask,
Okay.
off topic question I'll ask, like how like by using this chart and the zones that have come out of the ratios and imbalances, like how did you play the morning? Is that a fair question to ask? If not, I can just shut up and just listen. I'm just curious, like I was not home, so I just wanted to know, like, how did you play the morning or anytime?
Okay. Yeah, no, that's a fair question. All questions are good.
Just
So
using this chart, right? So basically, just trying to get just trying to get my head more around it. It's already around. I'm just trying to get more around it, getting familiar. So
yeah, absolutely. So let me look at this first chart here, right? Okay, there's that one. Okay, here's this one. 165, 218. So this morning, okay, so you had these imbalances down here. I believe it was at least one of them down there, right? 155. Yeah, yeah, and you can see that these were previous imbalances because they're obviously they go to the left, right? So they weren't repaired, right? So these are coming from a previous day or previous imbalance area.
correct.
So when we opened, right, this was 9 o'clock here and this was 9:30. So you had the data that came out at 8:30, which was about here, right? And we sold off, right? And we had a nice move down. Obviously throughout the overnight session, you know, we continued to move lower. And then the
Correct.
data came out, and then obviously we sold off there, and we came down and we dipped and we hit this low, right, which was about 156, 15156 on NQ.
Correct.
We ran, go ahead.
No, I was just saying
Okay.
correct. I'll just be on mute.
We ran back up some, and then price started kind of trading in this range here. Okay. Now, initially I was a bit bearish, right? But when we came down and on this next 15-minute candle, we made a higher low and we kind of held this imbalance area. I started kind of shifting my thesis, right? Thinking, hey, you know, if we hold this area here, there's a good probability that this might be an area to be able to take a long with a tight stop and then target the upper imbalances, which would have been these up here at 260, 265, which was something that I was targeting as well. I'm just trying to make sure that I got the right set of yeah, here we go. Okay. There's that. 1, 2, 3, 4, 1, 2, 3, 4. Okay. And then you did dip down one more time, right? So this is just my opinion, right? But I think that this was a liquidity grab, right? We came down a little lower. What it also did is it kind of set up a trap where where I think it set up a trap for people who were still short and or trying to chase being short with the move down. And so we made a lower low than the previous candle, but still technically a higher low from this from 2 candles ago, right? 2 15-minute candles ago. So once we got down here and we started to bounce, that's what really kind of gave me my inclination of, hey, the trap is set. Let me start looking at the levels above 225, 230, 235, which were up here. And I was kind of using, just this area up here that, hey, if we can stay above this here, there's probably a good probability that we're going to fire up and at least try to take some of this out up there. And now here it doesn't look like a big move, right? 230, 235 to 260, 65. But I mean, that's still your 30 points, anywhere from 20 to 30, 35 points, depending on where you would have got in and what your risk tolerances are and all that good stuff. Okay. So I think I posted this chart in the chat, if I'm not mistaken, which here's a screenshot of it, right? So I just drew a line on where I was seeing kind of the tops of some price areas. We were holding these imbalance areas, right? Which this is the one that's right here on this chart here, right? Same thing, right? We set the trap here with that low, right? I think we trapped some more shorts on the move down, and then we pushed back up. You set up a couple of imbalances. You got this real nice buy imbalance here, which means, hey, or at least to me, it means, hey, the trap is set good now, right? Because you held there and you got one here. Now let's start looking for a move up 225, 230. If we can break above 230, 235 this area, we're going to target these imbalances up here, 255, 60, 65, maybe slight higher, but being conservative, I was like 265s, the top of that range, just so, if anybody does decide to take that they're not going to be hung out to dry, in a sense. All right. So we'll move this back down now. All right. So that imbalance area is this one here, right? So we were able to break above. We shot up, we hit it. We actually came up to this 280 level, 282, right? And then we had a pullback. Now I haven't fibbed this out here, but this is probably like a 56.18, right? If we're taking here, there. So here would be your 618, give or take. So here's your 618 pullback. So this would have been another nice entry. And what else does it line up with here? Right? That previous imbalance, right?
Correct.
That we pushed up to trap this area down here. And we even came down and did it again a bit there, right? So we set up an imbalance. So this is giving, at least for myself, a good picture on direction that I want to see price go, or that I think price will hold, bounce, and go. This is about noontime. This is just me, right? I'm speaking for myself, but usually at about 11:30, sometimes noon, right? But during lunchtime, as early as 11, as late as noonish, I usually stop trading. I don't trade through lunch because I just statistically don't do well when I trade through lunch. So one of my rules that I have or that I try to follow, unless it's just real explosive trend day, nonstop, shallow pullbacks or rejections or whatever to the downside, I stop trading and I'll come back around 2:30, see what's going on, and then decide to take trades from there on out. So that was hit. That was a really nice trade. If you took it, here you get your 618 type retracement there. I even think if you add, let's try this real quick. Levels. So we're gonna we'll add a level, and we're gonna make this a 31, right? And then what are the rest of these at? 10 and 1 dash dot. Okay, yeah. So we'll leave that there. So here's your 31, right? This is my preference, right? But it looks like a 31 on the extension, but if you want to use it on a retracement, it's going to line up with the 6.9. So I like to use a 618, a 5618 and a 6.9 on the retracements that I use for my fib levels. All right. 6.9, I learned from a guy a while back that used to use them, and I started using them on my charts, and for me they just work out well for whatever reason, right? Some people like 7.0, some people like 7.1 or 7.02. There's small nuance variations of it. For me, I like to use that 6.9 level, and a lot of times it'll line up just like it did here, right? You came down 6.9 retracement or 6.18 there, or a 3.82, 3.1, however you want to look at it, and then you bounce, right? So now, if we're looking at this chart here and you're trying to go long here, look it up here. You got another imbalance area. It did get what's the word I want to use? Repaired. I guess we're gonna say got repaired, right? So it got repaired because you saw price move through it, and then obviously it stopped, right? But that could have been a target as well, right? So, let's say you don't get in at 15.2, which 15.2 is also a nice psychological level, right? So even if you got in and you had an order here at what's this, 05, 15.205, you know, um, a 10-point stop would have put you right about here, and you would have still been in that trade, right? Or if you were using the bottom of that imbalance at 15.2, a 10-point stop is 190, you would have been a little lower, right? 10-point stop for, even if you're up here at 240, you know what I mean? That's 205, 35 points, or 240 points. Or if you're up here at 270, that's 65 or 70 points, however you want to look at it. Those are really, really nice moves. Even if you're trading with micros, you can do very well on 50, 60, and 70 points. So I think those are things to consider when you're trading. If you don't want to trade a mini, because it's too much risk, you could trade 3 or 4 micros. You could trade 5 micros, and then you can offset your target profits, right? If you're trading 5 micros and you want to take some off right away to reduce risk, 10 or 20 points away, here's 225 or 230 that we targeted before as a place you wanted to be above. You could take 2 off there. You could do one at 250, psychological 250, 55 that we targeted before, right? There's one there. And then you got one that you're going to let run up here or even more, right? But those are just things to consider.
Thank you very much, Frank. Thank you.
Oh, no worries, man. No worries. I hope that you know, we can get something out of this and it helps people, you know? Because I think it is very useful and helpful. You know, it may take you a while to understand it completely and learn about how to read the numbers, but at the end of the day, right, you know, what we're paying attention to for simplicity is we're paying attention to these imbalance areas. Just simple things that you look for in normal uh in normal technical analysis, right? You're making higher lows, right? You got buy imbalances or sell imbalances, you know, stuff like that. That you know seems to be uh normal stuff that anybody could use. So we're taking that off there, right? And we're still making higher lows throughout this whole move. It was slow and it wasn't pretty, and it definitely would have been difficult to try to hold up. Once we got above 265 over here, I was targeting I think it was 315 and 320, and then ideally I wanted to see 335 and 345 if we really got a squeeze going. I got to look back at my notes, but I think it was 310 to 320 or 315 to 320, right in there. It was the initial target higher, and then followed by this 335 and 345. 335 and this area was important because that was an area that we held a support yesterday throughout the day. When we kept trying to break down, we kept coming down to this 335, 340 area, and we would hold and we would bounce higher. So that just stuck with me from day before or 2 days ago, whatever it was that happened recently. Um, but we still grinded higher collectively, right? And then essentially at the end of the day, right when we're getting ready to close, we come up and hit this what 313 ish. No, I'm sorry, it should have been 311, right? 311.75. Yeah, so we hit 311.75 is what it was, and you know that was our end of day push. We didn't quite hit that 315, 320, but it was close enough, right? Um, and then obviously if you're taking it from here or even here, you know, all you got to do is really just move your stop up as it goes, right? You may not be hitting that 310, but you're still up at 260, you know, even from, you know, from 200, 205, you know, you're still 55 points in if that's where your last runner is, or if you're inching it up to take it at 300 or 310, whatever it is. Um, let's look at ES real quick. Yes, ES. Let's see what happened here. I don't really trade ES honestly, so just bear with me a bit. ES was a little different, right? So here's your data at 8:30. This is it right here. Massive move down, and then you came right back up off of it, and then you came right back down. So ES was even more difficult, at least in my opinion. It would have been, right, because you would have been here. If you chased it short, this is you know, stopping everybody out, you know, anything above this 441, right? And then they just kept going. And then up here, right, what happens? You try to chase momentum and then it flips on you and it comes back down. So trading this in here would have been ugly, honestly. Um, Finally, 10 o'clock rolls around. What do we have? We had some, I think we had some speakers, right, that started talking at 10:30-ish, something like that. But we get going. Uh, it seems like ES started following suit with NQ right here at about 10:30, right, where it starts pushing higher. And then we push up and we start making higher lows and even a higher high there. Um, the only place that let me rephrase that. Two places that I would have looked to take a trade at open from ES would have been a short off of this imbalance. Look at all these imbalances that you see. Look at how we just shut off uh, on the ask and then just dropped, right? So you could have looked to take a short here, right? If it was at 451, let's just say 450. All right. You know, with a 2-3 point stop, right? One contract you're risking $100, $150, or 200 with 4 points, right? At 450, and then up here is what, 450, 150. So a point and a half, would have been your true risk on that, right? And then what I would have done was I would have tried to target the tops of these previous candles there, right? At about 440, 441. So you're targeting about 10 points down on ES, 500, that's 500 a contract on a mini. And then after this trade, if you see another move back up, this is where you got to be careful on trying to take it again, right? Because if you try to take it again, that's when it could burn you. You made your 10 points, you start looking at price, you see you left an imbalance there. Okay, buyers are stepping in here. Maybe I don't want to go against this short this time. You come up here to this imbalance there, and then you see more buy side imbalances, right? You can see here with the green and the that turquoise color that I got. And then you come down, you make higher lows. So now you start looking long, right? Ideally, what would have been nice is if you would have been able to come back down here. But honestly, even if you look at it, that probably looks like, a 7-8 retracement using fibs, right? So right here, maybe this is about a 50%, right? From this low to this high, right? So if we fib it out, we're going to take it from there to here, right? And look at, and what is this, right? A 50% retracement. Here's your 50%, right? So you come back down, that's using your fibs with looking for that golden pocket, using your Flowtrade strategy. I'm not sure where well, here, you know what? We're here, so let's add them. I can't really say I don't know because I have access to them. And so the first one I'm going to use is a 15-minute Celt on this 15-minute chart. And then what I'm also going to do is I'm going to add a 4-hour. On these, I usually like to have the 15-minute or current time frame, and then also the also a 4-hour or daily, depending on what I'm using. So we'll use this. Here's a 4-hour. Okay, there we go. So here's your 15-minute bottom. This is your 4-hour bottom, right? So we've definitely come lower. So even that, like you can even try to target mean reversion to that, right? There or there. But I would have looked for a trade off this 50 on ES, and then I would have targeted what? Anybody?
120, or at least
Say that again?
1.20 or 120%. What Paul usually
1.27 he
yeah,
means.
27. Yeah.
You're right, but
Yeah.
let's think of you're right on that, but let's think of imbalance targets. The reason the 127 is hard to target on this is because look at the range that we're looking at, right? You're looking at 434 up here to 457. So you're looking at 22 points. So 127 extension on 22 points, it almost did hit at the end of the day, right? But let's look at closer targets. I mean, using imbalance references, right? So let's say if you took 3 contracts, right, off this low here, what would have been some nice targets to target? So let's say one of them, your long-term target is you're going to hold one contract to the 1272 extension. All right. Now, what are 2 other shorter term targets that you could target and take risk off? as price is moving in that direction.
It could be the next imbalance on the previous high. It's around 454.
Exactly. That's perfect, right? This one here, right?
Yeah,
Correct. That's exactly what I'm thinking, right? I'm going to target this imbalance up here at 454. And then where's the next one?
it could be Fib's next level, 1.27.
So no, we're going to target this one up here, right?
5-9.
459, right?
Yep.
Yeah,
Yep. Okay. So that's how I would have been looking at it. If you're, if you're okay with holding and up to that 1272 extension, by all means. But the way that I like to play these is I like to target previous imbalances just in case we do get a major rejection. That way I'm taking some risk off the table. Obviously, you can also move your stop up as well. But you would have risked almost stop out here. Even if you would have moved it to that low there, right? You would have got stopped here or even there, and you would have
That's
left.
what happened with me. That's what happened with me exactly.
Yeah, you would have left your 10 points on the table to the upside. So it's I don't have there's no right answer for it, at least in my opinion, right? Sometimes you can do that and you're gonna hit your extension, and max out on the money you can make for your contracts. And other times it's gonna come back and stop you out for less of a gain. And it's just, sometimes you can wait and take those shots and they're going to pay off well. And then other times, you may want to look at potentially taking some off the table, right? So, for myself, I would have taken one off here. I would have taken one off there. And then the last one, would have been that 1272 extension up here, which didn't quite hit, but, close enough, right? So, you could have moved this up to, even if you saw it topping out at above 460, 463 quarters, you could have set your target maybe at the top of this 4-hour bottom, right? So just using, other tools that you have at your disposal to look for targets. You could have looked to the left here and said, hey, you know what? This lines up with the previous imbalance. We got these opening and closes right in this area, 461 3/4 to 462 half, right? So I would have used that as well to try to target in case we didn't hit this extension, because we kind of kept getting topping out here, pulling back, topping out here, pulling back, and so on. So, those are other things to consider. So yeah. Now, okay, questions?
Frank, when you are game planning for the next day, would you look at those green imbalances or the purple ones, and then game plan based on those, and from there you decide, okay, maybe the imbalance down at 441 green, you would maybe initiate a long position there. Is that how you game plan for the next day?
It is. It is. So I try to come up with we're going to say a rough draft, right? The rough draft the night before, because sometimes, as you know, futures overnight can change a lot of things, right? So you can wake up in the morning and see your game plan either played out almost completely, like this morning, right? Yesterday, a lot of people, myself included, were looking at possibly a short down, to some of these levels, but with the move down overnight and then the data, it kind of nullified that. So that short all the way down wasn't going to work anymore because of what happened. So now we got to come back and then start revamping it. But that's what I do. I'll do that as a rough draft. I'll come back in the morning. I'll wake up. I'll look at everything. If there's data, I'll let the data come through, and then start deciding on how I want to play it. And then after we open, I'm giving time to set up your opening ranges, and stuff like that, and then deciding if I'm gonna start looking for long or short, depending on what we're trending, or if we're gonna be range bound trading ping pong off of different imbalances, right? And something you can use that's helpful is I don't know what this is called down here at the bottom right, but it gives you like a zoomed out view, right? So you get this view, and then you see these imbalances that are left from up to a month ago, which is what I have it set at. But even here, right, if we were looking at over here, I think a while back we posted a chart where we saw weakness, and we're like, hey, if we drop below 490, we're going to start looking at 450 because we got all this area that has nothing in it or nothing to stop price until we start getting down here, so that would have been a nice target there, right? Which it worked out. And then again, so now so then the other part, right, is I took a fib from this low to this high essentially, and I started looking at it. Now, if we come back down to this 618 retracement, that would have been ideal for a potential long, based on this higher time frame read that I'm looking at. And and fixing it, we did a 50% here, right? We dipped below it and then bounced higher. So now we really got to lose this 448 in order to start targeting this 424, 425, or even the top part would be this 430 area here is kind of how I would view it. But with me taking that fib, and I guess, I mean, if you can also change your perspective, right? And you can move this bottom anchor, and you can definitely move it here to grab yourself a different look, right? Which from here, this is a 618 almost retracement off of that, So are we going to look for it to bounce, right? And if we do bounce, what are we looking at? If we bounce from here, I'm looking for a move back up into this high here, which is at about 480, maybe 485. And then if we reject there, then you start looking to move back down this dark area where there's nothing, back down to 460, 458. If we clear it, then we start looking at these levels higher. So that's kind of just how I would game plan it, looking at it for, 10, 15, 20, however you want to do it. And then once we, tomorrow morning, then I would look at it again and then kind of try to gauge sentiment and then kind of see where we're at and start planning trades around those areas or areas where I feel we're gonna move to, if that makes sense.
Yeah, it does. Thanks, Frank.
Okay. Okay. Does anybody have any other questions on these two footprint charts that we just went over?
Frank, you just zoomed in, right? You didn't do anything else special to go in and see that view that you were earlier on.
That one,
Yeah,
right?
this view. Yeah. You just
Okay.
zoomed in. You just zoomed in, right? You didn't do anything else.
The only thing I don't know what this setting is called. It's a little
Oh, there is.
emblem on the bottom right of the chart for Flowtrade desktop.
Correct.
But that's all I'm using. I'm just pushing this there to get back to normal picture or there
Okay.
to zoom out.
Okay.
Yep.
Okay.
Yeah.
Alright.
And that's a really useful feature. One day I'm going to find out what it's called so I can refer to it properly. But for me, I like using that. That's real useful and helpful. And you don't gotta scroll or anything. It's real quick. You can look, glance, and then you can get back to whatever you were doing or looking for. So yeah.
Maybe chart undo and do undo button means whatever you were looking.
Correct. Correct. Okay. So I like to, there you go. The magic maker. Exactly. That's a good one. We'll have to put that in the next update. a lot of people like to use time-based charts, right? Myself included. I use time-based charts for certain things that I like to look at. And time-based, what I mean are charts that are of time, like a 1 minute, a 30-second, a 5 minute, 15, 30 hour, and so forth, right? And then there's tick charts, all right? Tick charts are trade-based charts. So those are transactional charts. So there's time by price, and then there's it's like if you're looking at at volume, right? If you're looking at volume on the bottom, which would be down here, this is volume based off of time. If you're looking at a profile, this is volume based off of price. So I like to look at and trade and execute off of tick-based charts personally, right? That's just my preference on the way that I trade and the strategies that I use. I like to personally use tick. So what I started doing is I started looking at higher tick-based charts to try to look at the footprints, right? So for NQ, I chose a 5,000 tick chart. Now, these are very intensive or can be intense on your on the data that you're pulling, because you're pulling a lot of data, especially if you're going farther out. So these are only 5-day charts as opposed to the time-based charts that are a month, right? You can do a little more, but I'm just looking at 5 days out right now off of tick-based 5,000 tick charts, right? And I like these better sometimes because you're actually seeing the transactions and how the transactions are going about, because this is the same chart as the other one, but you can see the difference, right? So this is NQ 5,000 tick, and this is NQ 15-minute footprint, right? So there's one, and there's the other. They're completely different. So you're gonna let so you're gonna get more data per bar because these are tick based and not time based, you know, so that's why you see them this way. But essentially, right, you can even look at it the same way that we did that other one off of those trades that we spoke about, which would have been, here's your imbalance of 200, right? Here's your imbalance of that 188 that we spoke about. Let's go back some. Yeah, we're gonna have to go 10, 930. Okay, so now here it is. Okay, so here's 830, right? Here's your 830 data, which came down, you sold off, ran back up, you came back, you set these imbalance areas, right? This one would have been a nice one here. You're making a higher low. You know, this was where that trap was set. 10, yeah, 10 o'clock there. Here's your 10 o'clock, right? This is where your trap was set. Higher low, dipped one more time for anybody else who was chasing it, and then you flipped it and ran back up, right? And then even fibbing it out, right? This is probably a 618 retracement from there to there, right? So we're going to take our fibs. Oops, wrong one. We'll take it there. We're going to grab it from here. We're going to take it down. Actually 6.9, right? So here's your 6.9, 618, right? But same difference. This is where you could have taken your trade, right? And then what are we targeting, right? We're targeting upper imbalance areas. So we would have targeted up here at 250, which is one of the levels that we spoke about, 250 and 257, 260 up top would have been a nice move. Okay. I don't think we quite, or even, and it lines up perfectly also with your 1272 extension, right? So on tick chart, sometimes you're going to notice that structure is at least for me, it's easier to read or easier to see. Even patterns and stuff like that, things line up, at least in my opinion, things sometimes line up better on tick-based charts than on time-based charts. Okay, that's what I've noticed in using them. And that's why I like to use them. But let me backtrack on that. If you want to start experimenting and looking at these tick-based charts, look at them and use them, or have them up, I should say, reference them. But I recommend sticking with your 15-minute footprint charts for now still, because I think they're going to provide you the best, a better read for the moment on what you're looking at until you get used to looking at these tick-based charts and whatnot. All right. But just reference them, draw fibs on one and then come draw fibs on this one and see if they differ, or see what looks better to you. Start seeing if other things line up for your targets or whatever. And then you can start, kind of start cross-referencing them. Because I think that's also good and important to do. All right. But this was that trade, and then it went, right? That was nice there too. And then you kind of ran back up after you hit this here, right? So even that there, you hit your 1272, you came back, you started making some lower highs, you dipped, you had this imbalance there, right? But overall, big picture, even with this low here, right, we're still making higher lows, right? Here's your low, lower high, or I'm sorry, higher low, higher low, higher low, right? So if you're taking quick moves to the downside, trade what you trade, but just understand that big picture, we are still making higher lows. So at least in my opinion, my bias and targets would have been to the upside until we would have got a break in structure, right? Which would break in structure would have been, breaking below this low and then seeing some rejection at previous price points, right? Like 200, maybe 190-ish, about there. All right. And then obviously you can use your Celts, right? Your secondaries on the lower time frames, seeing where your 5 minute, 15 minutes are at, and seeing, if you're getting rejected. Also your what is it called? Your flow index, right? I like to use flow index, for reference as well. It doesn't do a lot of good if you're trying to take faster trades on a 30-minute time frame. But I do like, or a 5,000 tick or a 15-minute time frame, but I do like to have it on there because I feel like it does provide value and use even in these higher time frames that we're looking at, right? You're not gonna see it immediately flip to be able to get in a trade, but you're gonna notice when it's shifting or changing direction, on a bounce after retracement and whatnot. That's gonna kind of give you confidence in that bounce happening, or that retracement happening and then pushing back higher, or that rejection happening to push lower. So I do like to reference it, and I think it's very helpful as well. Okay. And then on ES, I'm using a 10,000 tick chart, okay? 5 days, right? Oh, real quick, NQ, right? So if we zoom out to our view, this is what it looks like. It hardly looks like anything because we're only using 5 days, because it can be, I could load more, but if you don't have a pretty strong computer, you're gonna have to wait a while, a bit for it to load, because it takes a while for it to retrieve that data because it is intense on your computer when you're trying to request that, FYI, right? And then here is your 10,000 tick for ES, right? So we'll go back to the open. Right, so here's your 830 data, right? We move down. And then here's that area on ES, right? So it looks a little similar there, right? So we dip down here. It looked like we were on a bear flag, right? You can kind of see it, right? If you draw your lines there's your bear pennant, bear flag. People are probably trying to go short every time it tops. You can kind of see with these sell imbalances where they're really trying to sell it from up here to drive it down. And then we dip, look at, here's your zeros where they shut off, right? Shut off sellers, flipped it, buy imbalance, and then we ran it back up. Stops got taken out, wherever was short got stopped out, squeezed a bit, right? And then we flipped again back down. You don't see it here, right? But this would have been that same area that we talked about taking a short, right, on ES, right? The top, it's almost the top where we 815, right? That lines up there, so this would have been a nice area to try to take a short with the tight stop based off that. And then you would have been targeting probably this sell imbalance down here at 442, right? So that would have gave you your, 8 to 9 points, give or take. And then you could have targeted, the bottom here as well if you thought we were going to come all the way down. This almost looks like a head and shoulders too, right? Here's your head, here's your shoulder, here's your kind of a shoulder, right? It's a little offset crooked, but you can kind of see it if you take a look at it. You can kind of, I noticed also you can kind of catch patterns are easier, at least for me, to spot on tick charts than on time-based charts. I have a way easier time and a quicker time spotting them on tick-based charts than time-based charts. You can spot them on both, but for me, I just know I can just see them quicker. They make more sense to my eyes or brain for whatever reason, okay? As well. All right, so you make a higher low there. You come back up. I bet this is probably like a 5618 retracement from that high to that low, right? So we'll take it here and we'll test it because that would have been a place to go short, right? So we take it there. Yep, here's your 50%, or no, your 618 is right here. This is your 6.9, so your 618's there. You could have got short there, flip down. You would have been targeting these lows again, ideally. And if you didn't get out, they flipped it and they ran it right back in everybody's face. And anybody who didn't get out or take their money or was waiting for a bigger move got squeezed out of this move right there, right? So that's why I feel like it's important to have near target sometimes. Because when this happens, you don't want to get stopped out for a loss. At a minimum, at least maybe break even or slightly positive. But if you had some targets, you would have been able to bank on 1 or 2 contracts while potentially looking for that 1272 extension down here, which just didn't hit today, right? For whatever reason. So that's kind of why I like to put some money in the bank on a move down, just in case something like that happens, right? So we'll delete that fib there, come back, and then obviously ES still continued from there to start making higher lows essentially and higher highs on the move up, right? What's that to that? So look, we'll try this again here. This might be a 50, is it? This might be like a 50% retracement, right? If you're looking at it from that low to that high. Right, so we'll take it there. Yep, so here's your 50%, right? This is your retracement. You go long again here. And then what do you target? You know, you target your upper levels, right? And the balance is up here. So I probably would initially targeted these tops here, right? 454. Or at a max, I would have definitely taken some off at 456 half, 457. If not, just waiting to target that, right? From that move there. But definitely you could have taken some off there. You could have taken, you know, one off there, and then here's your 1272 extension. We just didn't quite hit it. So you would have pocketed, you know, some on a contract here, some on there. You know, if you didn't inch your stop up and you didn't get stopped out on here for a profit, because you could have moved it up as your as you made higher lows, you know. So from here, you move it up here to 449, 450, right? And then once you go higher, you move it up again, 453 half, you know, and then essentially you take some off there and then you get stopped out here. But even at 453 half, you know, from let's just say 446, you know what I mean? You're still 8 points up, you know, 8 points, you know, is $400 on a contract on ES. So that's still good money to get stopped out. And then you probably made another $500-600 on these contracts. You know what I mean? So you're what? You're no, I'm sorry, you would have made more. So if you're 8, so you 510, so you would have been up 1,500, 1,400, right? If you would have made 500 on those other two a piece. I think that's really, really good money to make on a single trade. And you just got to be patient and look for them, and then, you know, draw your fibs or your levels or your Celts, right? Or your dynamic flow zones, which we'll add those here just to kind of see where we're at. Here's the weird part that I owe, right? So this is my, I guess it's not gonna work, right? So I'm gonna have to figure out or mess with it a bit and with the settings on seeing how to apply these Celts or flow channels on a tick-based chart. So trying to use a time-based indicator on a tick-based chart, which is possible, but I just haven't gone through it enough or messed around with enough, and it really didn't click until right now when I was trying to add them here, just to try to see if we could add them for reference, and seeing how they line up in reference to a time-based chart. Like if I'm comparing a 10K tick on ES to a 15-minute tick on ES, and putting 15-minute Celts or 15-minute flow channels and 4-hour flow channels on both of them, and seeing how everything lines up. All right, it should be similar, but I assume there's going to be slight differences in them. Okay, so that's just something to keep in mind. Oh well, here you go. There it is. So here's a 4-hour. Okay. So 4 hours. So this, it should be the same, right? 455 half, is that low? Yeah, okay. 455 half. Okay. So they should line up then. So you can add your 4-hour and your 15 minutes off of these. Does anybody have any questions?
Do
I
you
think
look
we
at,
have,
Say that again?
I think someone spoke at the same time I started. Go ahead, boss.
thanks, Hank. Frank, I was just gonna ask you, do you factor in the volume profile you have on the left at all, with the footprints?
I do reference it, but so the left volume profile I use is a weekly profile. And then the one on the right, you can hardly see it because of that level 2 that I have, but it's a daily profile. So if you can see this, it's a grayish, right? So that's a daily profile that I have on, and this is a weekly. And mainly I'm just using them for reference to see kind of where the point of controls are, where the higher volume areas are, and then where there's either low volume nodes or poor structure. So if we do start to get in those areas, that we could look for more aggressive moves through them based on poor structure that we need to go back and repair.
Got it.
Because anytime you make an aggressive move up or down and you leave poor volume structure, in my opinion, you're always going to come back to those areas and repair it on a retracement, on a trend change, whatever. Price will come back to those areas and repair those areas almost all the time. From what I noticed in my experience in trading. So I just like to pay attention to them because it's because we're going to head back there at some point. And if we do, I'm going to plan trades off of that retracement, or if we're trending, or if we're changing trend, I'm going to plan a trade in the opposite direction. Yeah, that's I think that's really all I have at least for now, unless anybody got some more questions that they or anything else that they want to go through. I hopefully going through this in real, like not real time, but just in just going through it for trades help people out as well. That way you can kind of see how to plan trades, you know, how to draw fibs. And you don't have to draw fibs on these either if you don't want to, or if you don't like them. You can use a regular 15-minute chart or your other intraday charts, right? I just draw them on here for simplicity, just so you can kind of see it and see how it works out on these charts, because to me it's the same thing. You know, I can see, you know, the same retracement areas on this footprint that I can see on a regular other candlestick chart that most of us use anyways, right? So, you know, either or, they both work great. And yeah, no problem, Hank. You know, handle your business. I appreciate you being here. You know, but yeah, if you guys don't got any other questions, I don't know what I missed or what I didn't cover up to this point.
Frank, one last setting questions here. Like on level 2, right? How come, just want to understand how did you end up making the bars so big on the left? Is this a
Okay,
setting
so on the level 2, you just go to your settings, right? And then you're gonna have your histogram width is how
Oh, you do.
like is how long they are, right? So, you know, if you the higher, the longer they're gonna stick out. Is that what you were asking or no?
No, like how fat they are out here, right? It's pretty.
It's zoomed in.
Yeah. Mine doesn't come out this big. I think so. Everything's my
Do
computer.
you
You have
check
to
this?
zoom in.
You check this pin to price scale?
Uh-huh. No.
The only changes that I've made when other than opening it is what I do is I change the levels to 100. I think I don't even know if I changed this, right? But I might change that a little bit, and then the only thing I add are these values. So I add 90, 150, and 250, and then I just change. Well, I leave that one yellow, but I change these two colors, and then I change that to 100, and that's really all I change in it. I don't really change anything else. I don't know if maybe just because the monitor that it's on, it makes it look bigger like that, but when we're actually looking at it on a screen that I have, because it's partial that I use most of the time, a lot of times it looks like this is how it looks. So that's how it looks when I'm referencing it through the trading day, because I'm looking at all of these other charts here as well that I like to view. I just expanded it, you know, for everybody to see here off of that.
Thank you.
So I'm still screen sharing, right? Yeah.
I'm gonna drop, guys. I have to go.
Yeah, so I don't know if that made sense, but I really didn't change anything. Honestly, I think it's just the monitor that when I expand it up here, that it makes them look bigger, right? And then when I minimize it, then they go down smaller unless I mess with that histogram level. Well, that's all I really got, everybody. I don't really got anything else. I think I've said my piece on this and going over the tick charts and all that stuff. So if you guys don't got anything, I'm pretty much done here.
Thanks, Frank. Have a good night.
Hey,
Thank you,
thank you,
Frank.
likewise.
Have a good night. Thank you, Frank, for all this information.
Hey, no worries, man. I appreciate it. I'm glad to try to help. You know, have a good
Yeah.
night, and we'll render this and then post it. Get it posted up for anybody who missed it or wants to see it again. All right, you guys have a good one.
Have a good night, everyone.
Yep.
Bye, Frank.